Welcome to the deep dive. Today, we're really digging into a fascinating story of corporate transformation. Right inside Japan, we're looking at SCSK.
Right. An IT services powerhouse.
Exactly. And they've spent, the last decade or so, basically tearing up their old playbook, making some really high-stakes investments to become a global digital player.
Yeah, we're tracking SCSK's journey really from its formation, which was uh, back in 2011. That's when Sumitomo Computer Service and CSK Corporation merged.
Okay.
And we're following it right up to today. Our sources really trace this massive pivot they made. They went from being a, let's say, labor-intensive system integrator, that classic Japanese SI model.
Very traditional.
Very. To what they now market really aggressively as a co-creation IT company.
And co-creation, okay.
So our mission today really is to dissect how this company, which is deeply tied into the Sumitomo Group, Japan's big manufacturing giants, how they're betting billions of yen on DX, on mobility.
And culture, too, right? That seems key.
And a radical cultural shift, absolutely.
Mm-hmm.
All aimed at hitting this ambitious midterm goal of, over 15% operating margin?
Yeah, that 15% target is just huge, especially for a company that started out in traditional systems integration. So we'll look at the cultural foundation that maybe makes this pivot possible.
Definitely.
The specifics of their service model change, which seems like the real heart of the story here. Yeah. And this strategic kind of high-risk play they're running in the auto sector.
And that includes a really key structural acquisition that just happened, which solidifies their new strategy.
Ah, okay. Good point.
But maybe let's ground this in history first.
Good idea.
So, the merger, back in 2011, it created a full-line IT service provider. Their foundational strength wasn't really specialization, it was completeness.
Right, they did everything.
Pretty much, the whole spectrum, consulting, system development, IT management, even BPO business process outsourcing. And this comprehensive offering, it's crucial because it means they built up decades of intellectual property, just solving all sorts of different customer problems. Knowledge they're now trying to monetize differently.
Okay, but before we jump fully into the tech side of that pivot, we really have to talk about their culture, because that seems to make SCSK stand out, especially among large Japanese firms.
It really does.
They keep winning these major awards for focusing on human capital, like the Health Management Brand Award.
Yeah.
9 years running.
9 consecutive years. It's quite something.
So what does that focus on well-being and engagement actually do for the bottom line? Is it just nice?
No. It's much more than nice.
Yeah.
It achieves, stability and competence. And that's in a market absolutely starving for IT talent.
Ah, okay. The talent war.
Exactly. That focus on a progressive culture, things like real diversity inclusion programs, genuinely supporting employee health, it translates directly into business value. Their voluntary turnover rate, historically extremely low, often reported around just 2% annually.
Wow, 2%? That's incredibly low in IT.
It is. And that low churn means they hang on to valuable engineers, they preserve all that institutional knowledge, and they avoid the huge recruiting and training costs that just plague their competitors.
Okay, so if I'm understanding this right, the progressive, maybe employee-first culture isn't just a nice-to-have perk. It's actually the competitive foundation. It allows them to take on these big, risky, long-term strategic bets.
Precisely. Think about it. If they can't keep their knowledge workers, they just can't execute their future vision. It's that simple.
Right.
Their whole strategic framework, this Grand Design 2030, which aims for comprehensive corporate value, and that almost unbelievable 1 trillion yen revenue challenge.
Yeah, 1 trillion, yeah.
Yeah, it relies entirely on their human capital.
Yeah.
So this grand vision, it's really underpinned by 3 core strategies: business innovation, DX, business commercialization, and that crucial continuous human capital investment.
So to get that kind of growth, that trillion yen number, they had to break out of the traditional mold of their industry. Can you help me understand the core problem with that traditional system integration, the SI model, particularly in a place like Japan?
Okay, think of it like a really successful, maybe highly specialized plumbing business.
Okay.
You can only install so many pipes in a day, right? Your revenue is directly tied to your skilled labor.
Got it. Labor intensive.
Exactly. The traditional SI model is fundamentally labor intensive. Your revenue is basically capped by how many high-quality engineers you can find, hire, and deploy. And as Japan faces, tightening labor demographics.
Yeah, the aging population, shrinking workforce.
Right. SCSK realized they'd hit an inevitable ceiling if they just kept selling engineer time by the hour. They needed to stop selling individual pipes and start selling like the blueprint for the whole city's water system. Something scalable, repeatable, a platform.
That makes perfect sense. So the shift has been really aggressive then, moving away from billing hours towards building IP, intellectual property that they can reuse and sell, probably via subscription.
Yes, a definitive pivot to a service providing model. PANTAS, platform as a service, and SaaS, software as a service.
PANTAS and SOT.
Exactly. They're leveraging all that accumulated industry know-how to
Yeah.
create these scalable products. And we see this very concretely when you look at their service portfolio.
Okay, let's look at some examples then. You mentioned Smakura earlier.
Smakura is a great example. It acts as a standardized EDI, that's electronic data interchange,
Right.
and it's basically an IT lifeline, mainly for the distribution and retail sectors. So instead of building custom systems for every single retailer, Smakura standardizes all those commercial transactions. It improves productivity across the entire chain.
So it's an IP layer, not just consultants billing hours.
Precisely. It's scalable intellectual property.
Okay, or what about Prometheus, their cloud contact center infrastructure? I like this example because it tackles a classic retail headache.
It really does. Retailers, distribution centers, they need way more contact center seats during, say, the holiday rush, right? The Christmas season.
Right, in the slow months, yeah.
Exactly. Prometheus is built based on usage, so it lets clients flex their capacity up or down dramatically without needing this huge capital investment in hardware they might only need for like 3 months a year.
That usage-based billing, that seems key to decoupling revenue from just headcount.
That's the core of the shift, yes.
And their main ERP solution, Proactive, that's also changing, isn't it? It's not just about enterprise planning anymore.
No, it's evolving. It's becoming more of a business management platform, and they have a major roadmap pivot towards making it an AI-native platform.
PI native, okay, buzzword alert, but clearly important.
Well, yeah. And this tech acceleration, it's driven internally by something they call Monozukuri innovation. It's their internal platform strategy called SCRED Plus.
SCRED Plus.
Yeah. And the stated goal is, well, it's kind of mind-boggling. They're aiming for development without writing code and infrastructure set up without building anything.
Whoa. Okay, that's ambitious. Trying to leapfrog productivity norms.
Hugely ambitious, that's the idea.
But this shift isn't just internal systems, right? It's also about external growth, capability growth. And that brings us to that big acquisition you mentioned, consolidating net-owned systems, announced late 2024. That looks like a major expansion of their service capability.
It's absolutely core to the DX pivot. SCSK, they realized they were really good at the applications, the core business systems.
Right, their traditional strength.
Exactly. But a modern DX company needs to manage the entire stack.
Yeah.
Everything. And net-owned systems brings that deep expertise in infrastructure, networking, digital security. Critical pieces.
It's filling a gap.
A big gap. The combination lets SCSK move properly into what they're calling digital resilience, being that single partner who can monitor and manage everything from the bare metal infrastructure right up through the applications.
Okay, end-to-end, end-to-end. And this combined capability, it's critical for expanding their digital footprint globally, too, especially looking at emerging markets in ASEAN. It's a move to make sure they are absolutely indispensable to their clients' IT operations.
Okay, makes sense. Now let's switch gears slightly to maybe their biggest risk, but also potentially the biggest reward, the automotive sector. They explicitly call this a core DX focus area. They want to lead in the software-defined mobility, or SDM, era.
Yeah, mobility is huge for them. They split it into two main domains.
Yeah.
In-car software, so software inside the vehicle,
Okay.
and out-car services, like mobility as a service or MaaS.
Right.
Their signature investment here, the really high-risk one, is their proprietary QON BSW platform. Qs. The whole point of QONs is to elevate SCSK from just being a service provider to becoming a true software Tier 1 supplier, deeply embedded right into the vehicle's core architecture.
Wait, hold on. That sounds like a massive, massive undertaking, something that could take years and years to actually pay off. Did they hit bumps in the road?
Oh, absolutely. It was always a long-term, high-risk play.
Right.
And yeah, our sources show the payoff was definitely slower initially than they hoped.
Slower how?
Well, for instance, back in FY 2019, the investment in the QNS platform was actually projected to generate strategic losses, potentially around 2 billion JPY a year.
Wow, 2 billion yen in losses strategically.
Yeah. They kind of realized that the big automakers, the OEMs, they were prioritizing AD's first advanced driver assistance systems. Things like automatic braking, lane assist.
The flashy stuff.
The flashy stuff, yeah. And that was delaying investment in foundational architectural changes, like Kianis needed.
So writing off 2 billion yen a year takes some serious corporate guts. What was the turning point for QINS then?
They basically identified the major business opportunity would coincide with new vehicle model changes happening around 2022 to 2023. That's when the architectures would really shift.
Timing the market.
Sort of. And what's fascinating now is the external validation starting to come through. Despite that slow start, the tech seems to be gaining real traction. We're seeing evidence like strategic partnerships with really top-tier players.
Like who?
Well, ongoing collaborations with ADVICS, a major brake systems supplier. And more recently, they secured partnerships with global OEMs like Honda Motor and component giants like Renesas Electronics. That just happened in 2024.
Honda and Renesas. Okay, that's serious validation. It suggests the long-term bet might actually be starting to pay dividends.
It certainly looks that way. The patience might be paying off.
Okay, let's talk about the strategic anchor here, the thing that maybe gives SCSK some global stability while they make these big bets. That's the Sumitomo Group connection, right? This is more than just SCSK having a big customer.
Far more. Sumitomo Corporation is the principal shareholder. They hold a controlling stake, 50.8% as of FY 2022.
Majority owner.
Right. And yes, Sumitomo is a significant customer, about 5.2% of sales in FY 2023. But the real strategic value is the operational link. Sumitomo Corporation, is one of the world's great the general trading companies.
Huge global networks.
Exactly. And SCSK basically acts as their global IT strategy partner. They manage core systems across Sumitomo's massive worldwide operations.
So the Sumitomo Group isn't just a stable client providing revenue. It's like an immediate, built-in global pipeline for SCSK's services.
Precisely. That linkage provides enormous inherent business stability. And crucially, yes, a built-in channel for SCSK to go after new DX business globally.
Right.
SCSK already reports having global implementation experience in, over 38 countries? And that Sumitomo relationship helps drive their expansion into emerging markets, like the new subsidiaries they set up recently in ASEAN, places like Indonesia and Myanmar.
So when Sumitomo goes global, SCSK is often their IT guide on the ground.
That's a good way to put it. It's a powerful synergy.
Okay, let's pivot then to the financials that are backing all this transformation. How are they treating shareholders through all this change, and how on earth are they funding this massive strategic shift?
Well, on the shareholder return side, they emphasize long-term returns. They have a basic dividend payout ratio target of around 40%.
Pretty standard.
Yeah, and they have a history of hitting that, sometimes exceeding it. They've also done share buybacks, and their BPS, book value per share, has shown pretty consistent growth, which investors like to see. It signals a steady increase in the company's underlying value.
Okay, stable returns. But the really big story seems to be the investment volume. We mentioned the ambitious goals, the trillion-yen target. They must be funding this with massive capex.
They are. They've kicked off this monumental investment campaign, earmarking roughly 1,000 billion JPY.
1 trillion yen.
1 trillion yen, yeah. Over just 3 years, from FY 2023 to FY 2025.
Wow, can you put that number, 1 trillion yen, into perspective for maybe our international listeners?
Okay, rough calculation. At current exchange rates, that's somewhere in the ballpark of $7 billion US dollars. Give or take.
$7 billion over 3 years. Okay.
Being poured into R&D and M&A like that net own acquisition we talked about, and critically, into human capital development. This is not just incremental spending increases. This is a strategic 3-year blitz designed specifically to propel them towards that 15% plus operating margin goal.
So that incredible level of aggressive investment, you combine that with the strategic stability from the Sumitomo ownership and the successful shift they seem to be making towards scalable PS and SaaS, that really defines SCSK's current value proposition, doesn't it?
I think it does. It's strategic stability backed by, pretty aggressive innovation.
Yeah.
They are definitely one of the most compelling corporate transformation case studies in Japan right now. Here's a company that really looked hard, saw the dead end of their traditional model, and just decided to spend massive amounts of capital and time to fundamentally change their corporate DNA.
So, recapping. We've seen SCSK navigate this really critical shift, moving away from labor-intensive SI work towards becoming a genuine DX enabler. And they're aspiring to be a software tier 1 supplier in mobility.
Hugely.
They've seemingly locked down the crucial infrastructure piece with that NetOwn acquisition, and all this while managing to maintain, somehow, an industry-leading culture and leveraging those deep, deep ties to the Sumitomo conglomerate.
Yeah, looking forward, SCSK's future really hinges entirely on execution now. Can they seamlessly integrate NetOwn's capabilities? Can they ensure that high-risk, long-term bet in mobility finally generates significant returns?
Big questions.
Huge. And can they effectively deploy that massive 1,000 billion yen investment without, sacrificing their efficiency or damaging that prized cultural stability that got them here?
Okay, so what does this all mean for you listening in? Given this rapid pace of change, their focus on making things without building them, and this real imperative to transform the core DNA of their engineers, turning them from project implementers into high-value service designers. How successfully do you think SCSK can actually maintain its unique people-first culture and its high profitability while undergoing this incredibly intense, multi-billion-dollar transformation? That's maybe the question to mull over as you watch their progress in the global IT market over the next few years.